What is going on, investors? You asked for this stock, PGY, Pagaya Technologies. So here it is. I'm going to give it to you straight, no BS. It is a fantastic company. It's an AI fintech company with $1 billion in revenue and only 800 million market cap. It only has 700 employees. That's how these AI companies are able to operate. 1 billion in revenue with 700 people. The problem is 400 of those people are in Israel, and it looks like they're all Jews. I don't know if I could say this, but it's just a phenomenal business. But the insiders are just killing it and stealing all the money from us. I feel bad for all the shareholders. We can see even the institutions just ran away from the stock and pretty much sold out. And the insiders, they're not just selling the stock, they're swing trading the stock to make some extra money. And if you look at their quarterly statements, this is for the 9 months ended. We can see the business is doing great. We can see that the net cash provided by operating activities went from negative 9 million last year to 34 million. But in the same time, the net income went from $176 million loss to almost $200 million, $188 million. And let's find out why. Share-based compensation, okay, they put it down. So they went from $57 million in share-based compensation to $45 million. But what did they really do? Sales and marketing, it actually went down. They cut it from 40 million last year to 35 million. And general and administrative, they raised it by almost $30 million. So they paid themselves less share-based compensation and gave themselves higher salaries. And at the same time, if you look at their balance sheet, they lost cash. They went down to $150 million in cash. They grew their assets by about 100 million. And at the same time, their total liabilities went from 400 million to 700 million. So this right here is just such a red flag. I am going to dig into the company and tell you guys what they do and why they are a great business. But just looking from this is all you can see. The management, what are they doing with the money they get? So return on invested capital. When you buy stocks, you're investing capital in a company, and they have a negative 3% return rate on that money. Return on equity, negative 33%. Return on assets, negative 12%. These guys should not be trusted with your hard-earned money, period. Net margin, bad, but improving. Gross margin, improving. We're going to get into that. Revenue has been increasing nicely, and we can see that they're projected to grow the revenue 16% next year and earnings per share 97%. Supposed to be GAAP profitable by 2025. So these are the type of opportunities that actually can make us a lot of money. A company that is not yet profitable, selling them less than one-time sales, and is projected to be profitable. These are the type of companies like SoFi was, not profitable, selling for $6, and now it's selling for what, $15? So these guys are a fintech company, but it's not like SoFi. SoFi is a one-stop shop for all your financial needs. These guys have just built an incredible infrastructure where they have an AI that takes less than 1 second for evaluation time for the applicant. Over 2 trillion has been requested from Pagaya. But these guys don't actually lend money. They partner with banks such as SoFi, US Bank, and 31 banks in total. And what they do is they connect you to the bank and they take a percentage. So right here, the percentage, the fees that they actually make has been going up. Now they make 3.5 to 4.5% on the money. And in the same time, this is the key point. The average income of a borrower is 120K. So these are the high quality clients that all the banks are looking for. And if you look at their total revenues, has kind of slowed down the growth, maybe because they've cut marketing and just pocketing all the money. And if you look at the fee revenue, less production, so they are becoming more profitable because they're raising their fees. And if you look at the network volume, so this is the key thing looking at the stock, because they make money on all the fees from the network volume. And we can see in the last 3 quarters, it has just went down. And right here, we can see that they have been improving their profitability. They used to have 3% fee, and now they have a 4.3%, and it just continue raising it. And we can see that the fees from lending partners has been growing. So actually, the banks they have been partnering with has been working. If you look at their EBITDA, they have been doing fantastic, just consistently growing and growing. So what do they do? There's 3 types of loans that they do: point of sale, personal loans, and auto lending for buying a car. That's been the worst one, has not been growing very nicely. The point of sale has grown 67% year over year. Point of sale, what is it? It's the last thing you do. It's like you buy groceries, that's the point of sale, and that's the loan they give out for you. Personal loans for whatever you need, and that's where they make the highest amount of money. They have a 6.6% fee. Here's a lesson to take away. This is what the CEO was saying, and read in between the lines. Companies try to sell you a dream, but not actually what they're doing. You want to look for cash flow, not gap profitability, because they won't actually have net income profitability. In conclusion, guys, these guys do have a bright future with the low interest rates, and the interest rates continue going down. More and more people are going to look for loans, especially in America. That's what people do. So I do think these guys will continue to grow their revenue, but they're not growing that fast anymore. It will be 10-15% growth in the revenue, and I just don't think this is the best place to put your money in, and this will definitely not 10x or do anything like that. So be cautious when you're looking at stocks and be vigilant. Thank you guys very much for watching, and comment down below what stock you want me to go over next.